Well, good afternoon, everybody. I have 12:30, and Ellen, do we have a quorum of trustees on the call?
We do. We were expecting Trustee Bartholomew, but you're fine to start.
Okay, so I would like to call the Audit Committee meeting to order, and I would ask Ellen to take the roll, please.
Certainly. Good afternoon, everybody. Let's see, Trustee Bartholomew has not joined yet. Trustee Irwin?
Here.
Trustee Gardner?
Here.
Trustee McMahon?
Here.
Trustee Martin?
Here.
Trustee Mishu?
Here.
And did I miss any other trustees? We are all set to start.
Okay, thank you. I would remind people who are not speaking to please leave your mics muted so we can get a better sound quality on the call. And the first agenda item, tab 1, is Clifton Larson Allen, the audit presentation, and I believe Michael Johns is the presenter.
Yes, good morning. Thank you for having us. I'm Mike Johns, and I'm the engagement principal for the audit, and we have a PowerPoint, which I will now attempt to share my screen. But I'm joined by Daniel Persad and Brenda Shear. Daniel's also a principal who works on the main engagement, and Brenda is our National Director of Student Financial Aid, who is going to go over some of the single audit or federal audit results. So let me just share my screen and I can get the PowerPoint going. Does everyone see that?
Yes, we can.
Okay, great. So again, thank you for having us. Really what this meeting does is kick off the financial audit for the year ending June 30, 21. And we'll go through what we call some of our required communications, some insights, some new accounting standards. We'll be brief on those and basically the audit plan. And then hopefully we'll get some feedback from everyone on this call as to anything you see unusual or may cause risk as it relates to the audit procedures we do. We will perform our planning over the next few weeks. That's generally just gating an understanding of the internal controls, updating our files, testing some internal controls, and the nuts and bolts of the audit, what we call the substantive field work, will take place in the September timeframe to meet the ultimate deliverable date of audited financial statements by the end of October, which is required by the state. So just briefly starting off with some trends, and I think as everyone on this call is probably aware, the biggest impact on higher education we're seeing is the results of the COVID pandemic and its results on the financial impact, and then the relief programs that the federal government has supplied to help with some of the financial impacts of the COVID-19 pandemic. We're up to HERF 3. So HERF 1 was in scope in last year's audit. That's the Higher Education Emergency Relief Funds, where we had that student portion of the aid and the institutional portion of aid. And now we have Part 2 that was passed in December, and Part 3 that we're just getting information on and was passed this past March. So significant federal dollars that will be coming into the university system with compliance required attributes to them. Similar to last year, we have requirements in how much aid that needs to be distributed for student aid, checks that basically need to be cut to them, although we did get some guidance that with permission, we could use some of those funds to offset outstanding receivable balances from those students. And then there's some restrictions with the institutional aid piece. However, they've broadened that and they include terms now like lost revenues that we can claim as allowable expenses for this grant. So a lot of money, a lot of compliance attributes. And as part of the financial audit, we'll be taking a look at the allowability of the expenses. We'll be taking a look at, is revenue being recognized in the correct period? Meaning, did we meet those compliance requirements that the federal government requires? And just kicking the tires there to make sure the distribution to the students was made in the correct manner. A couple of accounting standards that are coming into play. The first is this year, and it's called fiduciary activities. And management and CLA have already been consulting back and forth, and I think we're close to what the impact of that is going to look like on your 2021 financial statements. But basically, you're going to have a new set of financial statements behind what you've traditionally seen. So right now we have one statement of net position or balance sheet and one statement of revenues and expenses and changes in net position or the income statement. What the standard requires is that anything we're holding, any assets we're holding in a fiduciary activity for the benefit of others, now needs to be taken out of those basic financial statements and displayed as two new financial statements, a new balance sheet and a new income statement. And where this impacts the system is one, benefit plans. So we'll have a separate statement for the other post-employment benefits and the defined benefit pension plans that we offer. It also impacts the investments that the system invests on behalf of related and other outside entities. And then some student organizations, most notably the student governments, where there's an activity fee that we charge as part of the tuition cycle. And then that activity fee is turned over to the student government to determine how that should be spent. So we will have that activity, which has historically been in your basic financial statements, taken out of those and presented as separate financial statements with some additional disclosures. The other statement I wanted to point out isn't effective this year. It's not effective until next year's audit, and it's on leases. And anyone with an ear to the accounting world knows that what the standard setters have done is said no more operating leases. We cannot have a lease and just expense payments as we make them. Every lease has a right to use asset and a liability associated with it that are now required to be presented on the balance sheet or the statement of net position. So what does the standard require? It requires a gross up of the balance sheet, but it also introduces a concept of embedded leases. And these may be in the form of service contracts. A plain vanilla simple example, we may think we have a service contract for coffee service. They provide the K-cups or the coffee grounds, and that's the service we're paying for. But if there's a coffee machine associated with that they deliver, and we have the right to use it in any manner we see fit, we have an embedded lease in that service contract. So unfortunately, the implementation of the standard is going to require a heavy lift from management to inventory all the leases we know we have and any potential embedded leases, and then look at the impact of recording those assets and liabilities on the financial statements, where in the past it may have been acceptable just to expense those lease payments as they're incurred. That's my high-level overview of the accounting standards. If there's any questions, I'd love to have a technical conversation, but we'll leave it at that for right now. The service team, similar to last year, I'll be responsible for the overall services we provide to the university system, which is the financial audit and the federal single audit. Brenda, who will be speaking shortly on the results of last year's single audit, will be returning next year, and she's responsible for the performance of that federal compliance audit. And then we have Daniel, who was recently advanced to principal, who was a manager last year on the system, but he'll be returning this year, assisting me with review and planning of the audit. And a new addition who's not on the call today, Sarah Doyle, is going to be our new manager or director, and she has vast higher education, public higher education experience. So I'm going to turn it over to Brenda, who's going to go over some of the results from the 2020 single audit. Brenda?
Great, thanks, Mike. So as Mike was talking, I'm going to go over the 2020 single audit. So we're going back to last year before we continue planning for the future year. So if we go to the first slide. So I want to talk about what we're looking at with the uniform guidance audit. So this is what we call the single audit, and it's basically the audit of your federal awards. So when we look at the single audit, what we're doing is we're looking at the major programs, and I'll talk a little bit about what programs were considered major for this year. And that's based on the size of the program and then the risk that's associated with that program. Well, we also do the testing of compliance for the attributes, the compliance attributes. So that's the allowable cost, the eligibility, reporting, etc. We do take a look at the internal controls over compliance. And again, this is just over compliance, not over the financial statements as a whole. And then lastly, we look at the schedule of federal expenditures to make sure those are reported properly. If we go to the next slide. So the major programs that we tested during the 2020 audit was the Student Financial Aid or Assistance Cluster, the Research and Development Cluster, and then the CARES Act. So that's part of the HERF dollars that Mike mentioned with HERF 1. That falls under the CARES. So if we go to the next slide. So when you look at what we tested during the current year, out of the $280 million of federal awards that the system received, we tested 254 million of that. So 187 was in the student financial aid, there was 52 in the research and development, and 15 in the CARES Act. So if we go to the next slide, we'll talk about the timing. So the timing is a lot later than normal. Usually we have this done much earlier, but because of the CARES Act, that's kind of what was delaying everything. What happened is the CARES Act was actually implemented in March of 2020, and that was because of the coronavirus. And what happened is that the compliance supplement, and that's kind of our audit guide, so that's what the Department of Education puts out, and it pretty much tells us what they want us to audit with the CARES Act. That wasn't released until right before Christmas. So normally we would have the audit done before Christmas, but this year, because we had to wait for this compliance supplement, everything got delayed. And with that release of this compliance supplement, they did an automatic extension of the deadline. So your deadline is actually June 30th. So we're still on time. Nothing's being delayed as far as the due dates. But we just want to make sure that you understand that everything is not because of management or CLA. It was actually the Department of Education and just the federal government as a whole is the reason for the delays. We did do a remote audit, which did kind of cause some interesting things to happen. It just took a little bit more time going back and forth with emails. And then also during that time when we were trying to finish this audit, as Mike said, there was more HERF dollars being approved. So the HERF 2 and HERF 3 dollars came into play. And that kind of took attention away from some of the SFA directors, the student financial aid directors, because they had to do both the compliance audit and they still had to deal with these new fundings that had to be addressed. So if we go to the next slide, we can talk a little bit about the audit results. So the status of the audit is we're almost ready to issue. We got all of the findings. Management and CLA have agreed on the reports. The reports are all finalized. They're ready to be issued. We're just waiting for the management representation letters to come in. And once we get those all signed from the different directors, we'll be able to go ahead and issue. So we're very close to issuing. We are going to be issuing a clean opinion or unmodified opinion on the student financial aid, the CARES Act, and the research and development. We do have some findings, which I'll discuss here. We do have what we call significant deficiencies because of those findings. It's kind of a default. Whenever you have a finding, you're automatically going to have at least a significant deficiency, but they did not rise to the level of a material weakness. So when you look at the report for the compliance, you'll see that we do have significant deficiencies defined. And that's because of the 5 findings that we have, which I'll go through really quickly here. So the first finding we have is with the common origination and disbursement reporting. And there was a couple disbursements that were not reported within the 15 days. So anytime you send money to a student, you have 15 days to report that. And once those 15 days pass, it's impossible to be in compliance. So that was one of the findings. Finding number 2 is you would use a third-party servicer for some of your enrollment reporting with the ECSI. And there's certain language in the contract that has to be included in there. And we noted that the contract with Maine did not have that language in. So we're just recommending that that language be included in the official contract. The next one has to do with what's called the National Student Loan Database reporting. And this was actually new testing this year. So we found a lot of findings within our client base on this. And it has to do with their enrollment dates being reported properly, the effective date, so when a student starts or when they terminate enrollment, and then just the effective dates, the timing of when they're reported wasn't actually correct. So because of this new reporting that we had to test this year, we had quite a few findings here. And this is a common finding that we're seeing amongst a lot of our clients. So I don't think that the Department of Education, even though there's a lot of instances of noncompliance, it's not going to raise a red flag to the Department of Education. The next one was the outstanding checks. Anytime a student does not cash a check for a refund, so for example, if they get student financial aid that covers part of their rent and their living expenses, there's a check that gets cut to the student. And if the student doesn't cash that check within 250 or 240 days, then the system has to send that money back to the Department of Education. When we did our testing, we noted that there was $29,000 that wasn't returned, and that will be reported as question cost, and the system has already returned those dollars to the Department of Education. And then lastly, when we did the research and development testing, we noted that there was 3 pieces of equipment that actually fell to the bottom of the ocean and got lost just because of malfunction of the equipment. And these were not taken off the inventory listing. So those are the 5 findings. As I said, nothing's going to kind of pop out to the Department of Education that this is a major issue. And I can't imagine that there's going to be any results of any program reviews or anything based on these findings. We do have some other observations, just what we call management letter comments. And these are items that they were non-compliant or issues that we noted, but it wasn't severe enough to become a finding at this point. But we do want management to be aware of them so they can address them so it doesn't become a finding. The first one is just documenting their reviews. In our audit world, if something's not documented, we can't say that it actually occurred. So there's a lot of reviews of reconciliations and professional judgment and other things that just need to be documented. So we're working with management to how these items can be documented. The next one has to do with distance education. And because with all of the remote learning that's happening, this is becoming a bigger issue. So we want to make sure that this doesn't become a finding in the future. And what's occurring with distance education is because nobody's on campus, you can't physically see if they're actually attending the classes. And currently, the institutions have a policy that they look at attendance at the end of the term. And we would suggest that you look at that at the beginning of the term. Just because if a student does not begin attendance and you get to the end of the term, then the institution is going to be on the hook if you can't prove that that student actually attended and you can't get that money back from the student. So just switching that to the beginning of the term will probably be a better answer for the institutions, especially because there's a lot of fraud going on in distance education. And we've seen a lot of what we call fraud rings, where people will just sign up for classes and never attend. They just get that student financial aid and then they're gone. The next one has to do again with the National Student Loan Database enrollment reporting, just kind of cleaning up some of those issues, making sure that they're consistently reporting amongst all of the departments. So the registrar has certain dates that they have in their system, and then the student financial aid departments have certain dates. And we just want to make sure that everything's clean and it's consistent among departments. And then the last one we have is with the research and development. Again, it has to do with that finding with the equipment that was lost at sea. Just making sure that you have policies and procedures that if something happens to a piece of equipment, there's an avenue of how that gets reported and how it's getting taken off of the inventory. And then also getting into the practice of doing inventory kind of counts to make sure that any equipment that is lost is timely reported. So those are the issues that we noted with the single audit report or the results. And I'll actually turn it over to Daniel now to talk about some kind of the planning for 2021.
Daniel, before you kick that off, maybe it's a good time to pause to see if anyone has questions regarding the past year's single audit. As Brenda noted, that last bunch of observations she went over were just in a letter to management or comments made to management because they didn't come to a level that needed to be reported to anyone else. But the findings were included in the financial reporting package that will be submitted to the Federal Clearinghouse and made public to the funding institutions. So I just pause here if anyone has any questions. I know the compliance auditing can get a little technical, and especially with student financial aid, all the rules and regulations and what Brenda went over. But if anyone has any questions, we'd be happy to address them.
Mr. Chair, I have a quick question.
Go ahead, Mike.
Yeah, on the distant education, how are you going to be able to monitor that? Because you could have someone sign in as a student, but they don't have to have the video on. But at the same time, you got some areas where if they do have video and audio, it'll come up as unstable internet, so they got to shut the video off. So how are you really going to be able to monitor that or check that out in an audit?
So the Department of Education actually put together a list of what they call participation, and that includes like actively participating in a program, in a class, submitting an assignment, taking a test, asking questions. Usually that information, when you go back and forth and asking questions, that gets recorded in the system. And then it's just a matter of keeping that documentation, that kind of record of the student attending and asking questions and participating. And a lot of times we can just take that, and we have to work with usually IT because they keep that information. And it's just a matter of making sure that that information exists for that student. So does that answer your question?
Yes, but is that for every, I mean, I'm not sure how big the classes are going to be. So if you're trying to get student participation, some classes you might not be able to get that because of the size of the class and just the very nature of it. So, but yeah, that is helpful. So thank you.
Yeah, and we had a discussion with management of the kind of different ideas of how that information can be captured. So they're taking a look at what is best for the system to determine how to manage that.
Are there other questions? Maybe management could comment a little bit about the fixed asset loss of items that sank to the floor of the ocean and what corrective actions we put in.
Yes, I'd be glad to address that. In this particular situation with the lost equipment, it's kind of known to the department that the battery within the piece of equipment, that they know that the battery life is not, tends to be kind of short sometimes, so the equipment does sink. But they have started their corrective action plan to send out better communication to the individual department heads so that the department heads are aware of their responsibility to report back to facilities management when there's a loss of equipment, whether, that be because it sank to the bottom of the ocean or there was a fire or it was stolen, that type of situation. And the campus does have a policy of generally of doing a physical inventory for half the campus one year, half the campus the next year. But of course, with the pandemic and not being able to be on campus, that kind of threw a wrench in that procedure. But they are planning to conduct a full physical inventory this fall when the faculty return. So they are on top of putting a corrective action plan in play for that particular finding.
Okay, thank you. Does any other trustees have any questions? I can't see everybody on the screen just because of the way we're screen sharing. Hearing none, Mike, why don't you proceed?
Thank you. I'm actually going to turn it over to Daniel, who's going to start with the looking forward to the 2021 audit plan.
Yeah, thank you, Mike. And in terms of the scope of services and deliverables, they are similar to prior years. We'll have the audited financial report for fiscal years ending June 30th, 2021 and 2020. We'll issue the uniform guidance report, which would be for 2021 that Brenda just talked about. We'll have a required governance communication letter, and then we'll issue our internal control letter and management letter with any recommendations as applicable, whether it be relating to the uniform guidance audit or if it's based on the financial statement audit. So in terms of the next slide, touching a bit in terms of our timeline, as Mike mentioned, we did meet with management before this call and went over various items that changed in 2020-21. But today we're kicking off the planning as it relates to our communication to governance. And then one thing to note is that even though we are meeting with governance today to go through any unusual transactions or any complex transactions or operational changes, just know our planning process is continuous from now until we issue towards the end of October. So if anything does come up as it relates to something that was not discussed today, please feel free to reach out to Mike, myself, or Brenda, and we'll make sure that we take those items into consideration. We will be doing our preliminary procedures during the month of May to the end of July. And then, as Mike mentioned, we'll be doing the majority of our work in September, which will be our detailed testing, confirming balances, and working with management to ensure that we are comfortable with the numbers. And then we'll work on the financial statements with management to make sure that we can be ready to present the final report come the end of October. So with that, the next slide touches a bit in terms of our responsibilities, because this is a good slide so that since we have various parties involved for an audit, to ensure that everyone understands their role. So when you look at governance, which would be the audit committee, your main responsibility is the overall strategic direction of the organization, and also accountability, which includes financial reporting. When we look at management responsibility, they're responsible for internal controls and accounting policies to make sure there's good policies in place. But then ultimately, management is responsible for the fair presentation of the financial statements. And then as auditors, our main responsibility is to express an opinion on whether or not the financial statements are free from any material misstatement based on the audit that we do in September. And then the next slide touches a bit in terms of our approach. As a reminder to the committee, we do not audit every single transaction that took place in fiscal year 2021, but we do our audit using a risk-based approach. What that means is that, as I mentioned, we did meet with management earlier before this meeting. We met, and today we're meeting with governance. And during this time frame, during these discussions, we discuss whether or not there's any changes or any risk that the committee knows. We take into consideration as we're planning for our audit. We do our audit using 4 different types of risk. If you look at the top right, we do have control risk, and we address this by doing a walkthrough of key controls on your internal control systems, whether it be your payroll disbursements or general disbursements, fixed assets, and other areas within your financial statements. Looking at the bottom right, detection risk, we address this by doing a new audit test every year so that management is now familiar with our auditing approach. And then also we do some data analytics by taking your entire general ledger detail system and running some anomalies and so forth within our system, and then would address those by working with management to get the various support so that we can feel comfortable with those anomalies. Due to the nature of some accounts, such as your cash, your debt covenants, payroll, and certain restrictions, those areas are inherent by the nature of the transactional cycle. So we do consider those as risk areas. So we plan our audit accordingly. And then there are some areas that are significant or considered to be fraud risks, such as revenue recognition, to make sure that, such as tuition, to make sure it's recognized in the correct fiscal year. And then any other items are deferred to the next fiscal year accordingly. And then management override of controls is also another risk. And then as Brenda mentioned, student financial aid is a risk area that we see. And then in 2021, we'll evaluate whether or not the HER funding is also risky, and that would be part of our testing. So with that, the next slide, I'd like to open it up to the committee. Here is where we go through any areas that you would like us to focus on, whether it be any individual accounts, transactions, process, or controls. And then if there's any concerns, whether it be for legal issues, any litigation against the university system, if there's any unusual transaction that took place in 2021, or there's just any general operational risk that we should be aware of. And then the next piece would be relating to knowledge of fraud and, whether or not there's any threshold that we should be looking at for communicating to governance if we do find anything throughout our auditing process. So the next slide, it has some questions there that I would just like to open up to the committee. Just in terms of 2021 financial results, complex transactions, any areas of focus, and then any claims, risk, or uncertainties that we should be aware of.
To facilitate discussion, is it possible, Mike, you could stop screen sharing so that the trustees can see each other? Thank you. It's a lot easier to manage a discussion like that. So questions from the trustee members of the committee or concerns in response to that slide deck?
Chair?
Yes, Mark.
Maybe he could just, Daniel or someone could just recite, or Michael, it seems to me there's a lot of federal grants, and there's also this year we've had a lot of gifting to the university system, some large gifts. I'm still trying to get my head around, are we auditing enough there? And I know some of it's required because you went over that at the beginning by the federal requirements, but that whole bucket of gifting and grants, are we looking at that deep enough is my question, I guess.
So generally our approach for contributions or gifts is we get a detail of every gift that we received during the year. We then, to step back a minute, we have an overall concept of audit materiality, which is calculated at 4 different levels. The highest level being a dollar amount where we couldn't say there's a clean opinion. Next level down is for financial statement line item. Anything above that threshold, we'd have to audit that financial statement line item, which gifts and contributions most certainly would be. The next level down is what we call individually significant transactions. This calculation, we don't share exactly how it's calculated, but the benchmarks that start with our total revenues and total assets of the system for the year, and then we apply some statistical theory based on that. So to answer your question, we get that detail. One, we look at every item that's above that individually significant threshold. So any gift that exceeds that threshold, we will audit by obtaining the gift agreement. And as auditors, what we're concerned with when we get that gift agreement is, does it contain purpose restrictions, or is it just a gift for general operating? Because that could impact how it's presented on the financial statements. We then, with the remaining population of those items that weren't individually significant, we apply statistical sampling. So the testing population will result on 2 things. 1, how many individually significant items comprise that population, and then 2, how big the remaining population is compared to our materiality. Given the statistical theory that's built in, the pundit, the mathematicians would tell you that if there were problems, we should find it in that sample. But as Daniel noted earlier, we can't audit every transaction that occurred during the year. So we do have to make testing selections. So again, with the gifts, we look at the cash receipt. If it's not a cash receipt, we look at the promise. We look at the legal documents behind them. That's just to prove that they exist. If there's a restriction associated with it, we make sure it's captured in the correct net position balance, whether restricted or unrestricted. Each year, also, if there were any gifts that had restrictions that weren't met last year, so they were sitting last year in your balance sheet in restricted net position, which is retained earnings in the for-profit world, and we spent that money, we met the restriction. If there's any transfers made over, we would certainly look at that population as well. In terms of the grants, what Brenda went over for the single audit, we do not apply that level of testing for the financial statement audit, meaning the federal government puts out this compliance supplement. They list 14 compliance attributes and tell us we have to test everything they deem applicable. For the financial statement audit, what we're really worried about is, are we recognizing revenue appropriately? And to do that, similar situation. We have a population, and we'll look at significant grant contracts at a higher level to make sure that revenue should be recognized. If there's very complex eligibility requirements associated with how that money was spent, we take a look at that expense detail. So for example, last year with the CARES HERF 1 funding, we got the lists of the student aid, we scanned them, made sure it looked appropriate. Same with the institutional portion, but we don't get into that nitty gritty level that we would get into in the single audit for the financial statement audit, because it's a different scope. For the financial statement audit, we're looking, are the numbers fairly represented? For the compliance audit, we're getting pretty nitty gritty into the contract details of what would be a violation of the grant agreement. So, you know, in terms of a risk-based audit for grants, if, you know, a grant that's new this year that has new compliance requirements that are a little different would have a higher risk than a grant we've gotten for 10 years for the same purpose. And just add a twist to this, we do test the internal controls around that cycle, making sure that there's the appropriate approvals that are required to recognize a grant. So that's our basic approach there.
That sounds good. Thank you for, yeah, it sounds like you've got the basis pretty well covered there.
Other questions or comments from trustees?
One question, and the pandemic created many forced all of us to get real strong at technology and adapt quickly. And I'm curious, because of these changes, it disrupted many of the workflows in all organizations. And I'm curious how we look at those paper transactions and workflows versus electronic. Is there some kind of internal control or compliance audit in that section or that area of research? Or
So one, we do bring in IT specialists who all they work on all year is information technology engagements, whether it's assisting with an audit or consulting engagements. They look at the general computer control structure as it would impact your financial cycles. So as it would impact the data that eventually is compiled and represents your financial statements. So they do look at those general type controls. Are you kicked off VPN after so much time? What are the security protocols? Are the passwords complex enough up with industry standards? So that's a starting point in our understanding of the internal controls. When we drill down to the actual transaction cycles, and I think what we noted last year was the controls really didn't change, other than maybe a manual signature became a DocuSign signature or something along those lines. With the ERP system itself, you know, the transactions were always processed electronically. So what we're really talking about is the source documentation behind that, whether it's an invoice, whether it's a grant agreement, whether it's something from the bank evidencing a deposit or a withdrawal. We haven't seen too many changes in the types of audit evidence that we're required to look at to support a transaction. And honestly, there weren't many from our experience last year with the, 2-3 month shutdown. There weren't too many changes to the processes, again, except for maybe a manual signature becoming an automated signature, or maybe with disbursements, if it wasn't already done, instead of someone in the AP department matching an invoice with a purchase order manually, that's all done and captured within the ERP system. And instead of a signature, you have a checkbox. And from an audit evidence standpoint, we're able to see that checkbox just as if we were able to see a manual signature. But this year, as we do every year, the starting point is we'll walk through those controls and we'll gain an understanding of anything that changed. And if something changed significantly, we would tailor our audit results accordingly.
Other questions, concerns from the trustee members of the committee? Hearing none, I think you're okay to proceed, Mike or Daniel.
Okay, and we will, Daniel mentioned, as part of any financial statement audit, we're required to not only find any misapplications of generally accepted accounting principles or errors in calculations, things along those lines, but we have to consider fraud. And when we say fraud, that could be either someone walking away with university assets that they shouldn't, or reporting fictitious numbers to an outside third party. And as part of that process of making sure that there's no fraud that we were unaware of, we conduct this meeting and ask if anyone was aware. We also reach out individually to various levels of management and employees in the system. And also we'll have a private conversation with the finance audit committee chair. But that's just one step in this kind of stool that comprises an audit. So I'll try to share my screen again to take us home with the PowerPoint presentation. And that should be up now. So we had some other slides just asking some questions. I know everyone received this, so if anyone has any comments they'd like to make to us, please feel free to email myself or any of my team, or set up a phone conversation. We'd love to have a conversation about anything that may be on your mind. Really, as we look at the appendix here, it's more robust information on the accounting standards, which I don't want to bore everyone with today and give them continuing professional education credits if you don't practice in accounting. But I will say we do have a website with a wealth of resources, especially related to the COVID-19 pandemic and how that impacted both institutions of higher education, for-profit businesses, and other institutions. So if you ever have any questions, that's a great place to look, whether it's related to the system or not. I will skip the technical, and I think we're close to our time here. I know if we have an executive session that we want to save some time for that. So our contact information is here. This was included in your board packet. Please feel free to reach out with any questions, concerns, anything comes up. And the report out at the end of the audit, we have another meeting with this group to discuss the results of our audit procedures. I mentioned I'll reach out for an interview with the chair, but in the meantime, if we are performing our audit and something significant came up, we would be sure to communicate before our closeout meeting in that October timeframe. If we don't come up with anything significant, then we'll report out as per the calendar. So that's the end of our formal remarks. Yes, Brenda.
Oh, I just wanted to add that with the compliance supplement again, I did see a draft of the compliance supplement, and they do not have any of the HERF dollars in there again. So they did communicate that they're going to be doing an addendum. We don't know when that addendum is going to come out. So once again, the single audit might be delayed depending on that timing of when that addendum comes out. So I just kind of wanted to plant that seed because it's probably going to be a delayed situation again next year.
And hopefully not the day before Christmas Eve.
Are there any other questions, concerns? Maybe Mike, if you finish, you could stop sharing your screen so we can see each other. Okay. Concerns, comments? Seeing none, the next agenda item we have is the Department of Athletics agreed upon procedures report. Ellen, I don't see Ken Ralph on.
Yes, I had asked them to join at 1:15, so I think they should be with us at any moment.
Okay.
We were very efficient in the first part of our meeting. Nicely run.
Yes, Ken.
If I may just interrupt, Mr. Chairman, for a second, should CLA representative log off now, or is there a planned executive session that we should stay on?
There is a planned executive session at 1:45.
Okay.
And it'll probably be early, depending on how long it takes with the athletics report. So, University of Maine Department of Athletics agreed upon procedures report fiscal year 20 overview. Ken Ralph, the floor is yours.
Well, thank you. I appreciate that. It's good to see everybody. Hope you're enjoying your Monday with some beautiful weather. The good thing is this report is actually going to be very, very brief because once again, Matt Curtis and his team in the Athletic Business Office did a remarkable job of making sure we were being compliant with all the rules and regulations regarding our fiscal operations. So I hope you've had a chance to review the report, which was submitted by O'Connor and Drew. We use them not only for our fiscal audit, but also our compliance audit. And they are very, very thorough. If you take a look at this year's audit, you will find once again that there are no findings, which makes us extraordinarily happy, which means that we did what we were supposed to do in the order we were supposed to do it, and in compliance with how the university handles its accountancy. Unfortunately, we didn't quite pitch the perfect game that we pitched last year. We did have one recommendation made to us. And so if you have the report, it's on page 14. And that has to do with financial aid awarded to scholarship athletes. And we had a couple of posting errors that were noted in which the scholarship amounts were posted to the incorrect fiscal year. So it's a relatively minor change. We agreed with the recommendation made by O'Connor and Drew. Matt has already made the arrangements to ensure that we are good to go with that in the future, and we'll be posting to the correct fiscal year. But that was the one and only recommendation sent to us. And like I said, there were no findings. So very, very happy news for us once again. And again, congratulations to Matt and his team in the business office for another incredible year. Matt, I don't know if you want to jump in and add anything to that.
No, nothing to add, but welcome to answer any questions that anybody may have.
Any questions for Ken or Matt? As you say, it was an excellent report. I am seeing no questions from the trustee members of the committee. We are doing extremely well on time. Gentlemen, thank you for your attention, and thank you for all the work you do on behalf of our students. Thank you. And so next we would go into executive session, and I would like a motion, please, for the Board of Trustees Audit Committee to go into executive session under the provisions of 1 MRSA Section 4056A to discuss the evaluation of personnel and the consideration and discussion of appointments, evaluations, employment and duties, and 1 MRSA Section 4056E to consult with its attorney concerning legal rights and duties of the university. Do we have a motion?
So moved.
Second.
Moved by Mike, seconded by Jim. Ellen, could you call the roll, please?
Certainly. Trustee Bartholomew?
Yes.
Trustee Donnelly?
Yes.
Trustee Irwin?
Yes.
Trustee Gardner?
Yes.
Trustee McMahon?
Yes.
I believe, Trustee Martin?
Yes.
Trustee Misher?
Yes.
The motion is carried.
Thank you. And are we moving to executive session?
Yes, I'll be sending you to a breakout room. You'll see the message shortly.